Well, folks, there's a whole lot of pain, whole lot of damage out there. I thought we'd go ahead and start out this video by reacting to what's going on in the market. I want to share my opinions and perspectives in regards to this market, opportunities I see, opportunities I don't see. After that, we'll get into a few reactions here. I want to react to this one, Alphabet's AI CapEx crunch. Here's what you need to know. Thought that could be an interesting one to react to. A Tesla, we got two Tesla videos to react to. Nelson downgrading Tesla due to lack of near-term catalysts, so I think that'll be an interesting one to react to. And the last one we'll react to is the key for Tesla is their ability to bring down cost. I think that should be an interesting one to react to. Okay, by the way, appreciate everybody joining me. Thank you for being subscribed, folks. Appreciate each and every one of you for being here as always. It's a tough day out there. Public countdown, 6 figures here today. Brutal, right? I'm sure you're down in your portfolio. Somebody was making fun of me earlier for being down 6 figures today. And listen, man, if you don't have 6 figures, you can't make fun of somebody that's down 6 figures in a day. It's just, you can't do that, man, okay? It's like me making fun of Buffett for being down a few billion in a day, right? It's like, there's levels, right? Alrighty, so Ulta Beauty. This is a stock just getting absolutely leveled, pummeled. I mean, look at this, baby. Now down 24% for the year. Obviously, this recent crash is really, really vicious. If we back this up to, we can say March, it's down about 35% since March, right? Absolutely brutal crash for Ulta Beauty. Ulta's looking pretty darn attractive. If we pull it up on 1000X here, you're going to see the valuation looks pretty compelling. And keep in mind, 1000X usually updates the market cap at midnight. So these metrics are probably even a little lower than what they seem right now. So the forward P on this one is probably closer to 14 even on it, right? And then the 2-year forward P is probably closer to like 12 even, or like just slightly above 12. So that's pretty attractive valuation here on Ulta. Obviously, it's a retailer, so you're never going to give it the biggest valuation, right? But that's compelling, right? Fubo, Fubo's had a tough one, right? Cake's down a bit here. Is a good opportunity, obviously, in Cake. Tremendous company, one of the most well-run restaurant chains out there, and a lot of people don't understand the growth behind this company quite yet. Lululemon, oh boy. Lululemon's now down 46.6% this year. I mean, this stock just can't catch a break, man. It just can't catch a break. It hasn't shown really signs of bottoming yet. That's the worst part in regards to Lululemon. That's the worst part. It hasn't shown signs of a bottom. It's just, I mean, there's no like bottoming formation forming. There's nothing. It's just still just down, vicious. Let's pull up Lululemon's valuation here and check this baby out. So Lululemon. Ooh, have a look at this. So forward P looks like it's going under 20 on Lululemon, which is actually pretty darn compelling. The one thing I'm concerned with Lululemon in regards to the stock price coming down a bunch more over the next 6 to 12 months is they have big expectations. Analysts have big expectations for next year's earnings per share growth, 42%, and revenue growth at 24%. You know, I don't know if they're going to be able to hit those numbers. Let's put it this way. I have a lot of doubts about Lululemon being able to hit an earnings per share growth of 42% next year and a revenue growth of 24%. I have a lot of doubts about that. I think it would be good if they could even hit 10 to 15% revenue growth. So then if that doesn't happen, obviously you're talking about more pressure on that stock, but I will say the valuation is looking pretty darn compelling. Shopify's had a tough one here. The Nasdaq's done phenomenal. Meanwhile, Shopify's down about 18%. So obviously Shopify, always a buy. Celsius, this is another one that's just brutal, right? It's not showing any signs of a bottom now at this point in time. And if we just back this one up to where it was, roughly 2 months ago, now down about 52 percentage points Celsius. Oh, that is tough, man. That's really, really tough. I was reading an interesting article that was done by, I think it was Fortune. It was either Fortune or Forbes. And it was on Celsius' CEO and how he turned around the company. And it was an interview of him, actually. And it was a pretty good interview. I really enjoyed it, right? Because he came at the company around 2012, and he actually thought the days were numbered in regards to the company. And then he became CEO, I believe it was 2018, and completely changed the company forever, right? And into actually a very impressive company. But with that being said, they're going through very tough times short term, and I think they're going through what some people believe is a big crisis. And it was interesting because he talked in that interview about being scared of the Pepsi deal. It was actually kind of frightening. Listen to how scared he was when they did the Pepsi deal. So they did the Pepsi deal back in 2022. This gave them distribution all over the United States and even into more international markets, right? But they were really just focused on like the big cities before that. And so now being spread all over the place, he talks about being very scared of that moment, right? And last year, certainly the distribution got put everywhere. And now just the question is, they're dealing with having to comp against those numbers, and can they move the product in, let's call it, markets that aren't big cities, right? Because they were really focused on Miami and LA and New York City, and there's just a lot of the big cities. So that's a big question here. And this is another one that you look at and you're like, can they hit these numbers? I don't know. 44% EPS growth this year, 40% next year. Current year expected revenue growth, 31%. Next year revenue growth, 47%. I have questions as well. I don't know if they can hit even close to those numbers. And so that's the issue you have going with a lot of these stocks is it's the prices have come down a lot, but there's still a lot of worries about analysts being too bullish on these companies, right? Nike, obviously very tough year, not as bad as Lululemon, but it's been brutal, right? 32% down for Nike. This is among the most brutal years I've ever seen for Nike stock, right? Now, if we look at Nike's valuation, now keep in mind Nike's such a great company over the past many, many decades. It should command a higher multiple than an average stock in the market, right? Because it's the creme de la creme. If we look at forward P on this one, 22, pretty darn attractive for Nike. 2-year out forward P, 15. That's what really attracts me. I think you got to look past 2024 in regards to Nike, and you got to look out to 25 and beyond. And I think things look very, very bright there. Buc-ee's is falling right back down on its face. It had that kind of pop once the Elliott news came out, that Elliott invested in Starbucks, and then straight back down. Now, in regards to Starbucks, let me be very crystal clear. This stock is a buy. Starbucks is a buy. A pretty easy buy actually, right? 19 forward P, 2-year out forward P, 17. Doesn't mean it won't go lower in the next few months, but this is a buy now. Whenever I'm thinking about stock, I'm thinking, am I going to make really good money on the stock over the next 3 years? Am I taking a very low risk in the stock over the next 3 years? Clearly Starbucks I think is fairly low risk over the next 3 years and very high reward. I don't want to say very high reward, but it's got a good reward. It's got some money to be made there, right? Winning Resorts continues to. This is another one. They're showing no signs of bottom right now in Wynn, right? This is a recessionary type move. Let's be very clear about this move in regards to Wynn Resorts. This is a very recessionary type move. Now keep in mind with the resort companies. So Wynn's at about a 15 forward P, about a 12 on a 2-year out forward PE, right? Assuming analyst numbers are correct here. And they're that bullish, right? Next year revenue growth 4%. That's like sleepy. Keep in mind with these companies, they're much more profitable than they look on surface level. And the reason being is companies like Wynn, they have massive depreciation and amortization, which is a non-cash expense, right? Depreciation and amortization is a non-cash expense, but it does negatively affect your earnings per share, your net income, things like that, right? So it makes it look not as good. But the reality is depreciation and amortization obviously is not a non-cash expense. So if you add that back in, a company like Wynn at $80 is an incredible steal deal. An absolutely knock your socks off, ridiculously great deal, right? But the fear is if recession happens, right, less people coming to Vegas to go to the Vegas properties, right? I could understand that. Macau, I think is going to do well over the coming years regardless of what happens, just to be quite frank, right? I think Macau's looking really, really good. Now, New York City, I was bullish on New York City. I got to say, there's a man, Vegas Policy, they call him. He's turned my mind in regards to looking at the NYC opportunity for Wynn and being against it. And I think, watching a couple of his videos, he really opened my eyes to how New York City won't let Wynn end up making any money there. Wynn will end up spending $12 billion, and the only one they'll end up benefiting likely are the workers in New York City. I don't think Wynn will actually end up benefiting. And so I actually wouldn't mind if Wynn ends up leaving that potential opportunity, which is sad. It's just, I think he's right in regards to that matter, right? And so, sometimes you gotta admit you're wrong, and I think I'm wrong, when I looked at that and thought that was a good thing at first. SoFi's come back to life here recently, taking a little bit of a breather. I still think SoFi is looking pretty darn good, not just for the long term, but for the short term as well. Zoom stocks, extremely compelling. Zoom stocks, one of the best deals in the market, honestly, with, I think, one of the most attractive risk-reward profiles in the market, just to be quite frank. You know, forward P is 11 roughly on this stock, and keep in mind, it's a very stable business model now at this point in time. Very stable growth, quarter in, quarter out. People stay signed up for it. And listen, people have Zoom, they really messed up in regards to Zoom, okay? Listen, Zoom is a SaaS company. They're not getting grouped like a SaaS company right now, but I think longer term, they're going to be grouped as a SaaS company. I think the more people realize this is a SaaS play and people that are signed up for Zoom are going to use it for years and years and maybe even decades to go in the future. They have the premier product. People love Zoom, right? They're making more of an ecosystem of a product as well, right? And then with the phone opportunity. And so therefore, 11 forward P doesn't make sense. If you're going to value this more as a SaaS, you got to get this forward P up to 25 to 30. So it means you get a 2x to 3x on the stock over the coming years, just as it starts to be viewed more as a SaaS play. And I think the only thing that has to happen here is time has to pass, right? More and more time that people realize, oh, you know, Zoom's business model is stable, which has already shown it's been stable, right? And it gets more stable, people are going to realize, oh, you know, it's a good, solid company with a great balance sheet. I mean, the incredible balance sheet on that company. So yeah, UiPath is a devastated stock. Look at this baby. Oh, it's lost about half its value this year, right? Down 49% this year. Do a little work on this one. It's a little confusing to me. I got to be honest with you guys. So I don't know if I'll ever actually be able to buy this stock. UiPath. Let's see. Oh, ticker symbol PATH on that one. So if we take a peek here at UiPath, forward P31, 2-year forward P27, if analyst numbers are correct, right? And earnings per share growth next year, very strong, it looks like. As far as current year revenue growth, 10%, 16% next year. I don't know, man. That's one that I'm having a little trouble with. Sam looks rather compelling. It's one of many drink companies that's just doing horrible right now. So Mattel's having a good time. UPS, a little bounce back after that massive fall yesterday, right? Incredible fall for that stock. Monster's under 50. Monster's under 50. Another drink company having a tough go at it. I mean, you look at Celsius and, you know, then you look at Monster and you're like, oh, Monster's not that bad. This is still really bad, guys. I mean, down 15% halfway through the year, right? A little over halfway through the year for a company like Monster is horrible. That's horrible. Like, usually Monster, the way you think about a stock like Monster is I can get 15% a year in this stock, right? And when you're down 15% plus and you're not even through the full year, that's bad. That's really, really bad. So no bueno in regards to Monster, right? Honest is looking really good. I'm really excited about their earnings. Carla's done a heck of a job turning that ship around. My gosh. Hopefully someday they get to do a Fortune or Forbes article on the way she's done it, right? Let's go ahead, take a look at AI stocks. Oh, man. Trade Desk down over 10% here today, but that stock's had a good year though, right? 27%. I don't know if they reported this morning. I'd have to look. I haven't seen anything. Palantir's having a tough one today. It's had a phenomenal year though, right? Some of these stocks, I don't take their drops that serious. Like a Palantir. Do I take Palantir's drop today serious? 6%? The answer is absolutely not. The stock's up 63% for the year. Even after this drop today, I can't take serious a 6% drop on a 60% plus gain, right? I just can't. So I take serious the drops when it's in stocks that have been absolutely devastated, but not in these high flyers. It's like, that's just some give back there. That's just part of doing business. I mean, just like this move, right? Parabolic move, and then we had a nice kind of down move there, some consolidation, and then whoop, right? Now we can have a little down move here, some consolidation, and then we'll start the next uptrend in regards to that one. NVIDIA looking attractive here. Google looking incredibly attractive here. Incredibly attractive. Now, Google McDougal, I might have to, I used to own some Google stock a while back. I might have to get back in Google. I mean, I like that 2-year out forward P there. I like the revenue growth. I like the earnings per share growth. I might have to do something there. AMD is, wow, no way. Okay, I almost thought AMD lost all its gains for the year. Not quite. It's still up 6% for the year. But man, you think about that move that stock had. It was a parabolic move all the way to 211, right? Now, in regards to AMD, now that it's moved down this far, I will say it's much more compelling in regards to AMD. So forward P on this one, 42, which is certainly, high, but in 25 and beyond, they should have some really nice revenue growth and earnings per share growth. And so AMD, if you are buying it, you just got to kind of look past this year. Not that the numbers are going to be horrible. They should actually be much better in the back half of the year. But things are getting much more exciting for AMD, in my opinion, in 25 and 26. So, I mean, look at next year's earnings per share growth expected here by analysts. 87% on average. Next year, revenue growth, 28%. So, AMD is actually a little compelling here. I will say that, now that it's under 150. Meta's a steal deal. Obviously, the stock's had a good year, right? And it's my biggest position, the public count, up 35%. But this stock's a steal. You want to see a steal? I'll show you a steal deal. Check this out, okay? Check this out. Look at that. Come on, man. Forward P, 2-year-old forward P, and look at the growth rates expected for this company. That's a steal deal of a company, right? They're spending a ton in AI. They're buying a ton of NVIDIA chips this year. They're going to buy a ton next year as well. Big deal. Like, at the end of the day, they're going to be one of the biggest direct beneficiaries of AI in the world. Phenomenal. Mr. Softy's coming down a bit here in price. It still trades a little rich if you compare it to something like a Meta, right? But Microsoft is a decent buy here. It's just not the most attractive. Adobe, this is an interesting situation because they weren't allowed to do that Figma deal. Then we also heard recently about Canva could be a real threat to Photoshop. A real threat, like serious. So when I look at something like an Adobe here, 25, 2-year out forward P, 29, I don't know if it's the best deal because they could potentially be having an existential crisis there. So, something to kind of keep in mind. Let's see how my hedges are doing. So obviously SQQQ is having a phenomenal day today. And then, which is an insanely small hedge for me. It's like nothing. And then Chipotle is going down again. They report after the bell. We'll see what happens there. If that baby, drops huge, that would be ideal. But we'll see. It's possible it has like a dead cat bounce situation. In regards to that one, it's been hit hard, recently. I mean, very, very hard. You pull up a 1 month on this baby, 19%, and we go back to kind of around the stock split time. It's lost about a quarter of its value since around that stock split, right? So, yeah, Chipotle is obviously in a tough place. We'll see what happens with their numbers. The thing that makes me feel comfortable still in regards to this Chipotle situation is it's still trading rich, right? Is it as rich as it was a month ago? No, right? When you lose 25% of your value, you're not going to be as rich as your value, but still trades rich. And I have big questions if they're going to be able to hit the current year expected earnings per share growth or next year. And the reason being is we got wages going up across the board. Their biggest territory is California. California just raised minimum wage to $20 for these sorts of workers, and that just went into effect last quarter. So we'll see, how that starts to hit the numbers, right? They're having trouble going up in price. They got bad publicity all over the place right now, so I don't know what's going to happen with that guide. The CEO is going to go on CNBC. I think he's going to try to spin it. I believe he's going on right after they report today. So we'll see if he can spin it in the right direction, but that's a whole situation there, right? So I want to look at safety stocks today. So look at safety stocks. Safety stocks watch list holding up pretty decent, other than, Microsoft and Apple, kind of the big techs there, the NASDAQ related stocks, right? If we go ahead and we look at banking today, Deutsche Bank down quite a bit, but not that much pain in banking. Big tech, oh my gosh. Every stock except IBM is red. Every stock. Wow. Talk about a brutal one. Oh man, I should pull up a heat map. Oh, that's brutal. Absolutely brutal. Commodities. Let's see commodities. So coffee's down, oats down, copper down, cocoa down, soybean down, silver down, lumber down. GSG sitting at 21. I love it, man. Love it. That's great news in regards to inflation. It's hard to get inflation if you're not having commodities do a bull run, and they're just not on a bull run right now. So good news overall there. But yeah, no doubt, a lot of damage out there today, specifically in regards to NASDAQ. But remember, some of these stocks have been, let's see, housing stocks here today. Housing stocks watch list. So Enphase having a good day. We'll see, if those gains hold past today. That's a big thing in regards to that. But you look at a lot of these home builders, they're still holding up really well in this market. Look at somebody like a Toll. Sheesh, 32% this year. Incredible. On a 1 year, 69%, right? On a 5 year, 276% for a home builder? For a home builder. Oh my gosh. I don't know, man. I don't know. I don't know about that. I'm just going to be honest. These stocks are going to come crumbling down when it's all said and done, right? And they look cheap. I understand they look cheap. But they've been going through arguably the most bullish time they could have ever imagined in regards to a hot housing market, home prices going up substantially, right? And then additionally, inventory being so low. I mean, this is kind of like a superstorm of greatness for home builders. And it's just like all that's going to slowly deteriorate, right? And so therefore, my just question is, are they going to have one last blow off top for all these stocks before they come crumbling, right? That's my big question in regards to this, but nuts, man. Absolutely nuts in regards to that. My gosh. All right, let's react to some videos here.
Bottom lines for the June quarter, slowing ad revenue, also those increasing AI expenses, worrying investors.
I hope you enjoyed that segment, by the way. That was like a lot of stock talk. That was a lot of stock talk there. So I hope you enjoyed that. By the way, 1000xstocks.com. I'll put that as a pinned comment today. If you want to apply for access to 1000x, you can do that. Obviously, we have the search feature here showing you all these different metrics versus where the market trades at, right? We also have the compare feature where you can compare 3 different stocks versus each other. Additionally, we have earnings call tab. So, you can listen to earnings calls right here, adjust the speed you want, right? Then we have our SEC filings tab right here. So if you want to look up any SEC filings for companies, you can. We also have the education portion here. I mean, I know a lot of you guys probably need video, basically these sorts of subjects explained. So we have all that there as well. So yeah, if you're looking to access 1000xstocks.com, go ahead, click the pinned comment down there, fill out an application. We'll see if we can get you access to that.
Our Steve Kovac bringing us the details for today's tech check. So Steve, what is the primary concern?
Yeah, so Sarah, we learned yesterday it is not cheap to be an artificial intelligence hyperscaler. And the theme of Alphabet's earnings last night, and we can expect that to continue next week when the cloud leaders Amazon and Microsoft report their earnings as well. Now, much of the conference call for Alphabet centered around how much Google plans to spend in capital expenditures to meet that increasing AI demand. That means AI startups and big names like Meta.
Listen, folks. This is great news if you own NVIDIA stock. Phenomenal news. All this CapEx, a lot of it's going into guess whose pockets? NVIDIA.
Anthropic running their AI systems on Google's cloud. CFO Ruth Porat said to expect Google to spend at least $12 billion each quarter to build out more cloud AI capabilities. Wow. Also, CEO Sundar Pichai said it's a greater risk to underspend on CapEx, so he'd rather overspend and use anything extra for other parts of the business. Now, to put all this CapEx into context, Wall Street Journal notes that Google's CapEx for the first 6 months of last year were
Dude, if you cannot be freaking bearish on NVIDIA. You cannot. Listen, when the CEO of Google is saying it's better to overspend than underspend, we're more scared. It's more of a risk to the business to underspend than overspend. That's insane. Because his thought process is the same exact as Amazon's thought process, as Meta's thought process, is an arms race. And they're like, dude, we would way rather overspend than underspend. That's the most bullish thing for NVIDIA for at least the next year or two, right? 3 years from now, maybe it's a different conversation. 4 years from now, 5 years from now. But the conversation for the next year or two is spend as much as you possibly can, right? Whew, and we know these companies have the most money.
as much as Google has already spent so far this year. For now, the spending is helping Google's cloud unit grow, though. It surpassed $10 billion in quarterly sales for the very first time, and it had $1 billion in operating profit. Reminder, though, Google was also willing to spend $23 billion on cybersecurity startup Wiz to juice more cloud growth before the deal fell apart earlier this week. Plus, Alphabet will continue to cut costs in other areas that have nothing to do with AI. That could be more layoffs. Among the hyperscalers like Google, Amazon, and Microsoft, though, there's generally more AI demand than they can supply. We've seen some efforts to mitigate that, at least in the near to medium term, like Microsoft's recent deal with Oracle to offload some AI cloud computing, including with OpenAI. So if you're concerned about how much the Magnificent Seven companies have to spend ahead to serve AI, Alphabet's outlook on that massive AI capex is a very strong hint. What we'll hear next week from Amazon and Microsoft, guys.
Maybe by the end of this video, IBM can turn red as well. Let's keep an eye. It would be cool to see every single stock on the big tech watch list red. Come on, IBM. You got to turn red by the end of this video.
The call and also from the report.
And also, by the way, I don't understand why this is shocking news to anybody about, oh my gosh, it's expensive to do AI. Like, if you know anything about the stock market, you should know that, right? How do you think NVIDIA has grown to a $3 trillion market cap? It's not just by magic, because all these companies are spending a fortune with them, right?
Did it change your price target or your rating on Tesla?
Yeah, no question. It was a disappointing earnings release. They missed by 10 cents, and this is the fourth straight quarter that they've missed. So,
I roll my eyes because, listen, anybody that knows anything about Tesla knew this was going to be a very disappointing quarter. I don't know one person that was at all knowledgeable of Tesla and was like, ooh, this is going to be a good quarter. Ooh, this is going to be a good quarter. No, okay, everybody knew it was going to be a bad quarter, even the most bullish bulls.
In the aftermath of the earnings release, we've actually downgraded the stock from a buy to a hold.
It might turn
our
red.
12-month price target is now $240. And the stock has really had a impressive rebound since their last earnings release in April. The stock was up almost 70%. And so, in light of that and all...
Exactly. That's another thing. It's red. Hey, there we go. All righty. The entire big tech watch list was red there for a moment. So Tesla, I think he brings up a great point there, right? I mean, this stock on a 3-month basis is, even after today's crash, it's up 34%. 34%. So this is just some give back, right? That's all this is. That's why this drop I don't even take serious today. I don't even take it serious. It's a joke. The stock's up 34% in the past 3 months. I can't take it that serious, right?
So what we think is a lack of near-term catalysts here with the robo-taxi day having been delayed a couple months until October. There's really not much in the way of near-term developments. We don't think.
If your stock is up double digits during the course of a year, I can't take a serious drop in that stock. It needs to be a stock that's already getting hammered, and then it keeps getting hammered, and then it's like, okay, then you can take that serious. But this, come on, man.
Story. And so we felt it was appropriate to move to a hold, and we will revisit that rating in October.
We're going to get to the road ahead for Tesla in just a minute. Could I use that pun one more time? But Garrett, on a serious note, our data team working overtime. I want to show you a chart when it looks at the gross auto margin for Tesla. The slide that we've seen in gross auto margin, how concerning is that if you're...
Only gets better from here, baby. And who called out that they were going to have huge margin problems? Me, long time ago. And so now the margin story just gets better and better and better as the quarters go along. Cybertruck's going to start being margin accretive in future quarters versus, I guarantee that was likely hammering their margins here in the past, right? Obviously, they brought down cost. They're done doing the significant discounts. So watch Tesla's margins over the next 1 to 2 years go up and up and up and up and up.
Tesla investor. I mean, really margin, that's really where they have the advantage over other automakers.
It is concerning, and it's a reflection of EV pricing that has come down so much over the past year and a half, and also the recent launch of the Cybertruck. Anytime you launch a new model, especially a kind of a niche product like the Cybertruck that's more difficult to mass produce than, say, the Model 3 or the Model Y.
I think it's cute. A lot of people are convinced that's going to be a niche product. It's not going to be a niche product. As soon as they get that out there, at price points that are going to be much more appropriate for the masses. So let's call it under 80K, and especially, I mean, if they can get it down to a 60, 70K price point, which is actually rather affordable for a nice truck nowadays. Oh my gosh. If you think that's niche, just wait. It's not.
Really going to weigh on margins overall. And so, they indicate on the call they haven't yet hit the point of profitability on the Cybertruck. They're continuing to ramp that up. And so that's really weighed on margins. But, long term, we still like the story.
Who called that out?
We think there's significant margin expansion potential over time as they sell more full self-driving subscriptions and as they continue to improve their product there. And so, importantly, software sales are extremely high margin, unlike auto manufacturing, which is very low margin business. And so over time, that's going to be accretive to their margins.
So I want to go back to those Elon Musk comments we played at the very top. He basically said, if you're a short-term shareholder, Tesla's not the stock for you. It sounds like you actually agree. I mean, coming up, and you said there's no near-term catalyst, but what about long-term? Coming up, robotaxi event on October the 10th. Supposedly the less expensive Tesla, the $25,000 Tesla possibly in the first half of 2025. And then Optimus, a humanoid robot for external use in 2026. Do you think those are long-term catalysts for this stock? And does Elon Musk have a point? If you're a Tesla shareholder, you have to give it some more time.
We agree, actually. You really look at the near term and the intermediate term. I'm talking looking out 2 to 3 years. There's just not a lot of clarity right now as far as earnings growth. And you're actually seeing estimates come down, not increasing. And so, until we get more clarity on what the intermediate term looks like, we think it's a hold. We think you're going to get that, come October 10th. But right now, Tesla is a story stock. It really relies on a steady stream of positive catalysts, hope for the future. Elon Musk has talked at length about what they're doing in robotics, AI, the robotaxi, energy storage. But a lot of these are really long-term drivers, and we believe in the story longer term, but there's just not a lot of visibility looking into the near term or the intermediate term.
So Garrett, we got to go, but very quickly, you said it ran up just too far, too fast. It's pulled back quite a bit right now, trading at about 228. Do you think this is a good level for Tesla, or is it still, after that run-up, is it still elevated?
So where the stock is trading pre-market, there's some upside to our target of $240, but we think it's a hold here. It's kind of taking a wait and see approach. We think that's the right approach for investors.
So do I feel like Tesla's a buy here today? I would say it depends on your time frame. What's your time horizon? Do you have the next 3 to 5 years? Okay, yes, it's a buy. Do you have the next 3 to 5 weeks, the next 3 to 5 months? Okay, maybe it's not a buy, right? It just depends on your time horizon. If you got time to play out here, yes, it's a buy. Everything for Tesla's long term is all intact. Anything that's happened over this past year or two, none of that's long-term worries, in my opinion. There's a difference between long-term problems with the business and short-term problems with the business, because businesses can have both, and they will go through both. I've never seen a company in my life that hasn't gone through either short-term problems or long-term problems, right? And if I look at everything that's transpired for Tesla over the past year or two, negative, right? That's all short-term stuff that will abate and will go on. Now, always keep in mind, it is ideal nowadays if you can get Tesla with something with a 1 in front of it, right? $100-something. With that being said, the next best thing is something with a 2 in front of it, right? So just a little food for thought in regards to that. All right, next one up here. The key for Tesla is their ability to bring down cost.
Profit as auto sales fell for the second quarter in a row. On the company's conference call, Elon Musk provided an update on the planned unveiling of the robotaxi.
We postponed the sort of robotaxi with the sort of product unveil by a couple months, where it's shifted to 10/10, so the 10th of October. And this is because I wanted to make some important changes that I think would improve the vehicle, the sort of the robotaxi, the main thing that we're going to show, and we're also going to show off a couple of other things.
Joining us now, Dan Flax.
We're going to show off a couple of other things, right? And the silliest thing ever is people making long-term thought processes around the short-term pushback. Oh, they push it from August to October. That's 2 months. 2 months. That doesn't magically change anything with the business model. It could change things with the stock, right? It can mess up a lot of things. It can mess up options market in a substantial way, which can put pressure on the stock, right? Because we know a lot of people were probably playing options around late July into August as far as expiration dates, right? Thinking the event was coming, there was going to be huge movements one way or another. And if all of a sudden you push that out to then October, that messes up the options market in a significant way, right? But I mean, as far as the long term, this changes nothing. They pushed it back 2 months. Oh my gosh. Oh, I guess robotaxi, that's not going to happen now. Come on, man.
Berman, senior research analyst. There's some interesting things in here, Dan, and there is competition. On the same day that GM is delaying a new Buick EV, Tesla did cite competition as one of the reasons that buyers were paying less for some of Tesla's core products. Who is a competitor to Tesla? And if Tesla's having problems, what EV maker can you count on that's not going to have problems in this environment?
Good morning, Joe. There are clearly cyclical headwinds. There are pockets of weakness in the consumer. Others, Western manufacturers have struggled to really scale some of their EV products. And so as they cut price, that puts overall pressure on the market. I think what's important for Tesla, though, is their ability to innovate, to continue to bring down cost. And that enables them to bring out lower priced models as we think about the next 12 to 24 months, which can help drive improved demand. You take that and you couple it with being able to deliver over-the-air updates like full self-driving. And so you have an incremental revenue and high margin layer on top. So I think the name is attractive at current levels.
I didn't even realize this, Dan. This is just staggering to me. So a bright spot for Tesla was that they actually sell regulatory credits to other car makers that aren't meeting emission requirements.
Joe, you didn't know that? This has been going on for years and years and years. Holy smokes, Joe, where you been at, man? Where you been at? By the way, you ever want to know how far ahead Tesla is versus everybody else, and why EVs are the future? Drive an EV for years and then force yourself to drive an internal combustion engine. So I rented a car. I had to go to a wedding last month, and so kind of in LA-ish area. And so we rented a BMW to take out there, and it's convertible. And I thought, okay, that could be fun, have a convertible out there in LA. The wedding was in June, so I was like, oh, that could be fun, right? So we rent this, I think it's maybe not even a year old. It's either 2023 or 2024 BMW convertible, right? And what a piece of junk. when you drive electric vehicles year after year, when you drive Tesla specifically, and then you have to drive one of these things, dude, it's like going from a smartphone to a flip phone. It's like, what is this thing? This is not it. And so, yeah, most people haven't experienced that yet, though, right? So they don't have reference. It's no different than I remember people telling me in when I worked at Quick Trip, this is like 2010, 2011, I was a big holdout on getting a smartphone. I was like, I don't need a smartphone, I'm just still using old school phones. And some of my coworkers were like, dude, you gotta get an iPhone. Like, are you kidding me? Like, this is awesome. I could do all this stuff with it. And I was like, no, big deal. I don't see it, right? And then I finally got a smartphone eventually, and then I realized, oh yeah, this is way better, right? There's no going back. That's EVs. That's Tesla. When you experience it, it's like a game changer, and there's no going back. You're like, no, it's like me saying, oh, let me go back and get my old phones I used to have in 2010 and 2011. No. You just move forward. It's just, people got to experience it and to really understand what's actually going on there. And that's why it's very easy for You ever wonder why? Why is it that so many Tesla owners then end up buying Tesla stock? Have you ever wondered that? Why does that not happen with GM? Why does that not happen with Ford? Why does that not happen with Volkswagen, right? Why don't Ford owners and GM owners and Volkswagen and Toyota, why don't they all buy a vehicle and Honda and then go buy the stock? Why? Because it's just another vehicle, right? Why doesn't somebody go buy a Mercedes and then think, oh, I'm going to go buy, Daimler stock or whoever owns Mercedes nowadays, right? Why does that not happen? But why is it that people buy Tesla and then start thinking, man, maybe I should buy Tesla stock? It's because they realize it's a game-changing product. There's a big difference there, man. And a lot of people just don't get it because they haven't experienced it, right?
Revenue from those credits, which is pure profit, was $890 million in the second quarter. That's more than half of the operating income of Tesla came from selling emission credits to other automakers that are failing to meet the emission standards. This is like crazy.
Can I ask what that means?
That's nutty.
If a Trump administration comes in and then gets rid of or lowers those emission standards, does that hurt Tesla's profitability then?
I think the focus is going to be on making innovative cars that consumers will love and want to buy more of over the next few years. The emissions credits, the political backdrop, clearly that could change. But I think you're seeing the company, it has a very strong balance sheet. They generate cash flow in some of the markets globally. They're different drivers for demand. Clearly, China's, I think, a very interesting market there, even with fierce competition. So even with the benefit from credits, I still think the focus is on the car sales themselves, the units, which should improve next year, in my view.
Well, then we must be sort of in the waning stages of whatever you want to call this kind of a hiatus in EV sales, because right now they're making innovative cars, and they're still, they ask Elon Musk, would you make less expensive vehicles, cut down on some of the, the extras on some of these versions, and he doesn't want to do that. So they got innovative vehicles. They're the market leader. And you still saw operating income down, or profit tumble 45%. So it's all fine and good to say they're going to keep doing it, Dan, but you're saying we're at the end of this, bump in the road for Tesla? We're nearer the end than the beginning?
Joe, we're in between two product cycles. So you had the Model 3, which was very successful. And I think what you'll see over the next 12 to 24 months is a lower cost car and also a new platform. And so we're in between product cycles. The key is their ability to bring down cost, have a $20,000 plus vehicle. We're now in the 30s and above. And so if you're able to bring down cost, that can appeal to more buyers. And clearly the range, the technology, the features and functionality should continue to improve. Even in a $20,000+ car, it should be a differentiated experience, which I think we'll see what we get, but I think customers...
Yeah, and I've been calling for this car for years to be a two-seat car, right? And a lot of people will push back, oh, it's not going to be 2 seats. I continue to triple, quadruple, 5x down on that. And the reason I'm so convinced it's going to be 2x, one is for cost reasons. The second is I don't think Tesla wants to release a $25,000 car that then steals market share away from a Model 3 or the Model S, right? They don't want something that could be seen as competitive to that. And so it's like, okay, let's say you don't want 2 seats. Let's say you want a 5-seat car. Okay, then you can go with the Model 3, right? Oh, you want high end? Okay, then you can go with the Model S. I don't think they want to launch anything that then is seen as a Model 3 competitor, because then you're just stealing sales away from Model 3, right? With a lower ASP. 2 seats, it's perfect, right? It makes the cost advantages there. It's the ideal situation.
That, which could help drive better growth.
But, I mean, Becky makes a good point about a change in administration. I mean, even with a pro-EV administration, what happened to the build-out with all the charging stations? What's going on there?
They're building it out.
You needed the infrastructure.
And they're doing it.
And even in a friendly administration, it's like at a snail's pace.
They're continuing.
What? I mean, just uneducated. They just freaking released the earnings. Like, how hard is it to go to Tesla's investor relations page and pull up the earnings report? Like, that's just not factually right. They just built out a bunch more charging stations, a bunch more charging connectors. They just gave you the data. I showed the data in my main channel video last night. Like, I showed all the numbers. Like, that's just crazy to me that these guys go on here and then, like, there's easily, like, researchable facts, and they're just not even they're just missing it. That's just crazy to me, man. So I'm about done with this. So I appreciate you guys joining me. Thanks so much for being here, as always. My gosh, these guys got a lot of work to do. That's all I'm going to say about that. Alrighty, if you're ready to do some work, get access to 1000X, that will be pinned comment down there today. You can fill out an application, and we'll see if we can get you on in there. Much love, and have a great day.